episode 100 of Tribe Talking.
Woo! Hey. Wow.
Whatever happened to the sound effect tray that you
Yeah,
had?
let me see if I can get the sound effect. Is that working? Yeah.
I remember a couple of times us having combos at different points about whether a certain thing should be included or not. And I remember one was the line about the dildo of consequence never arrives lubed. And we had a long discussion about whether or not that should be included.
It's fair to say, when we first brought our thesis around hardware and software 4 years ago, there were a few people that called us idiots.
So I believe that however difficult you believe the journey will be, it ends up that difficult. And you could see these founders who very much spoke of their fuck-ups as if they were the victim in certain things. But really, when you unpacked it, they had made certain choices that had put them in a situation where these things happened.
There was an article yesterday in the AFR, I think, that some shares in 3 funds run by Blackbird, the country's biggest venture capital firm, changed hands at big discounts, alarming backers who fear that many of the investments have been overvalued. Good afternoon.
Hey.
Hi.
We have a guest with us. Maggie has joined because her father, i.e. me, was running literally 3 hours late today getting home.
Is that a new record?
Well, it's only a Don story.
That's what we're here for.
Yeah. But I guess that would be a prime way to start off episode 100 of Tribe Talking.
Woo! Hey. Wow.
Let me see if I can get this.
That's an achievement, guys.
Whatever happened to the sound effect tray that you had?
Let me see if I can get the sound effect. Is that working? Yeah. All right. Well, hopefully by the end of it, we'll have some of this. I'm just going to turn my aircon off.
How warm is it up there, Don?
Oh, it's so warm. Went to the beach, went down to Pottsville on the weekend, which was grand.
Since when did you use the word grand?
Grand?
Grand. That was grand. Seems very non-Don.
It was grand. It was a grand weekend. It was 8 school friends and all their families from 20-something years ago. More than that now.
Jack, you had an epic week off last week.
Yeah, I had a week off, went to Ellie Beach, so it was really nice not to look at a laptop screen. I'd say it was relaxing, but also wasn't that relaxing. Like kids on holiday, it's not that relaxing, but
No,
it was just good
not.
not to be. It was just good not to be strapped to my desk looking at a screen. So it was just like I definitely did recharge.
But part of me does think that I should just not go on holiday for the next 3 years. It is so much work. Maybe just take a few years off.
It's a good plan. Just wait until they're older, a little bit more self-sufficient.
What have you been up to, Ash?
I was at South by Southwest last week, so was very busy. But yeah, I flew back in late Friday night after getting delayed on the tarmac, and then up to Brizzy tomorrow morning on the red eye. So yeah, looking forward to catching up with you guys in person later in the week.
Yeah. Was South by Southwest any good?
I got something out of it. So my personal experience, yes, I went to a handful of sessions and I took away some really good nuggets. I've put together a post on LinkedIn, but I would say there's 3 or 4 things that have really stuck with me, and I'm now actually trying to think about how they will shift the way that I go about my day-to-day work. So the co-founder and CEO of Notion, Ivan, was there. He was phenomenal. Absolutely incredible, engaging, authentic, and just had some really words of wisdom. So one of my biggest takeaway from the week was how he described human capability. And he said it's the makeup of technical capability plus taste and agency. And that in the world of AI, capability is becoming commoditized. And so what is setting people apart is their taste and their agency. And I just thought that there was such a clear depiction in my head of what that meant and how people need to be shifting. And then that flowed into the notion, pardon the pun, but that's the only word I could think of to flow that in, of knowledge work is having the same evolution that we went through when we went from walking everywhere to be able to drive a car. So the example he used was, if you think about cities, you have Florence, which was built for humans, which was built for walking. Then when we had the evolution of the car coming into play, you now have cities designed like Dallas, where it's at machine scale. And so the knowledge work industry is about to go through that same evolution, that same churn of being defined by human capability to be defined by machine capability. And then went to a great session with Peter Walker as well, which I shared with you some of the slides of just some really good insights as it relates to capital, as it relates to, you know, the hires really getting pushed out, where a lot of people aren't making their first hire for almost 18 months now. Hire 2 to 5 is getting pushed out as well. And that, you know, lean teams are really winning. The 1 to 5 people teams are really what's raising. And something we've been talking about for, you know, the past probably 12 months now is that the benchmark for Series A ARR has only skyrocketed. And that, as we've all discussed, it's not really a depiction of product market fit anymore. But you could actually see that in the Carter data, which I thought was really interesting. So a lot of the trends that, you know, we've been hypothesizing of, they now have enough data in their platform to be able to put some meat around. So I thought that was interesting. And the true delta between Australian VAL and offshore US VAL. There was a great slide I think I highlighted to you guys of, it's like essentially there's like a $2 million delta at minimum for kind of pre-Series A, Series A. So it was really interesting just to kind of see the data in line with what we've been chatting about.
And it's great that you had that sort of experience. I do wonder though, could we have done it with events and talent from internal? Do we need to import everyone and pay offshore people?
I mean, they're still all really valid questions. I think I was just very conscious of the sessions I went to, and I went to the speakers that I'm not going to get a chance to see. So, you know, I went to the speakers that were offshore, that were flown in to hear from them, because I'm not going to have that opportunity probably. And so I think it depends really with the lens you go in with, right? There were heaps of sessions as it relates to onshore talent, and I went to a few of those as well, but you don't often get to hear from, you know, Notion CEO as an example. So
yeah, fair enough.
It's all about, I think, the intent you go in with. And I think after my first year, having gone a couple of years ago, I didn't have my expectations super high. And so I went with clear kind of KPIs of, you know, I want to introduce myself to a couple of interesting people a day. I want to make sure I'm going to a session where I can walk away with knowledge that I can then transfer. So I think it's like any conference. It's really what you go in with and how you try to spin the day for yourself.
Very good. And Aaron?
Murray and I went to see Teddy Swims on Saturday night, and that was a lot of fun. But
I don't even know who that is.
well, so this is my confession. I didn't know either. I just, when Murray booked it, I just smiled at it. Great.
Where's he swimming?
I'm
And
not
why would you go and watch him?
I'm not sure he
that?
swims at all. But you would know some of the songs. But my challenge is I don't know pretty much any artist or any song by title, so I can't even tell you what the songs are. But it was a bloody good night. It was a lot of fun, and a rare night that we actually got out. So it was good.
My wife and I, on Monday, because we have date nights on a Monday night, we were coming first in trivia.
Woo! That's it. You were coming first in trivia.
Yeah, and somehow we ended up
and then it
6
started.
out of 8 with only 2 rounds to go. I don't know what happened.
You have heard him. I'm sorry.
Something's got a hold on me lately. Oh, I don't know myself in love.
Yeah, I mean, it's not 80s, but that's fine.
No, look, it wasn't as good as the 80s silent disco night, but it was still bloody awesome. He's got a great voice. It was a really good night.
Unbelievable voice.
Yeah. And then Sunday was spent doing nothing, and otherwise just house hunting. And the property market's going nuts.
I've got some charts. I think I'm worried about a lot of things in life, but actually I'm disproportionately worried about the property market. I don't think people realise how shit Australia could look in 10 to 20 years if this continues to happen. But let's leave that for the Sharts. I thought, given it's episode 100, why don't we do a little reflection? Because it's been a little while. I think it was was it 22 where we did our first?
Pretty sure it was 22. Yeah, 22.
And a lot has happened since then. Now, I went and put all of our guests on there. It's a long list. I don't think we actually have time to go through what we liked about each of them. But when I read through the list, there's wisdom of the likes of DeMarco. There's the Energizer Bunny of Vutran, who always gives me a shot in the arm when I get to have a chat to him.
Who's the only one we've had on twice, right? The only guest we've had twice.
Adrian DeMarco.
Oh, Adrian as well.
Have we had Adrian Bunter on twice? Only once. Well, we should have him on twice.
Yeah, I think we had Bunter once, but I remember saying we need to continue the combo. One of the surprising ones for me was Tom Waterhouse. As we got into that, the way he runs that fund and his focus on numbers, I guess I didn't have an expectation going in, but I just found it was quite a surprising episode for me.
Yeah, that's true. And it was so this is why you just got to be in it to win it. How Tom ended up on the episode was we were using some LinkedIn automation to share the podcast with some first connections I had, and shared the link to the podcast, and Tom thought it was an invite. And he said, yeah, I'll come on. I was like, sweet, let's do it.
So good. Ed Keelan's always great. Like anytime we have him on the podcast for any content. Lucy Walk was another one that was just shit. That was a fun episode.
Dan Javeski from WeWork. WeWork. Oh, God, he'll kill me. From WeMoney. Sorry, Dan. Who was your favourite, Jack?
The favourite one I've actually listened to was Adrian's, both his eps. I think, like, for anyone listening or anyone in the ecosystem, you should give them both a listen to, just because you're hearing from an operator turned investor. I think there's so much to learn from both sides. And what I took away was just how a VC should work with a startup founder, and really what are the roles and expectations from both sides, and how do you build a one-pager and a cadence that we can then push accountability down.
Yeah, no, that's true. I've used a lot of his stuff in the portfolio support work. The episode we did with Tom Humphrey, which was pretty early on, also stands out in terms of we were forming some thoughts around verticalization of AI, but I think that episode helped crystallize a few things.
Was it on the back of that or before that we developed our own go-to-market canvas?
No, I think we had stolen heavily.
We'd taken some of his stuff around the models.
It was more Ed when we started talking about the conjoined triangles of success.
Yeah, that's right.
I think the person that's given the most time is Chris Gillings with the cut-through venture report, and then just after those episodes hanging around talking a bit about venture in general. I've really appreciated the effort and the support and the random messages from time to time.
That is a funny story arc too, from when we first criticised him.
Well, I do have a section. We can jump ahead. I do have a section. What's the best of Tribe Talking in terms of this episode format, and what's the worst? And I think, because I only listened to it again the other day, and I was very embarrassed because I performed very poorly. It was a hard listen to. I didn't realize I'd been that much of a prick, but also not done any research. It's a bit like sort of like a doctor having a crack at cigarettes, quite rightly, but then someone else having a crack at the doctor who's having a crack at the cigarettes. That's the way I sort of feel I was in that loop, because there's a lot of problems with crowdfunding, and Chris was right on the money. But I also still had that in one of the best parts of this format, because without me being a dick, we may not have come across Chris in that manner. And I still remember because I was flying to Fiji, wasn't I? And I was trying to wrangle the 3 kids, and Chris sent an email saying, hey, I listened to your episode And I think I was at 40,000 feet trying to reply with 3 kids. I think, Jack, you will recall, like the email didn't actually make any sense. And it sounded like I was a total drunk.
Yeah, I think there was 2 replies from you, Don, and both of them were just absolute garbage. Like there were just so many spelling mistakes.
Yeah, I could have waited, but I think in that moment I knew that I'd fucked up, and wanted to get him on immediately.
But that is a great outcome. We love you, Chris, and it's great that you listened and gave us some time.
Yeah,
Yeah, other good ones for me were Anne-Marie Burkle. She's always a ton of wisdom and incredibly humble. And also Judy in South Australia. So Judy and I go a long way back, but like she just has such a unique view on the ecosystem here, but also out of the UK. And she crosses between Queensland and South Australia in her experience base as well. So that was really good.
I think what makes Judy so helpful and a value in the ecosystem is just has sat in so many different chairs and has such a broad range of experience that I think that's very hard to come by.
Yeah, completely. As I'm looking at the list I'm just wondering if there's any that we've done that haven't been published yet that we should also acknowledge, or are they all now live?
I feel
Is
attacked.
Chris Milligan live?
Yeah, well, like I made it live, I think the night before we flew into the UK, and we were catching up with for dinner, and there was no way after 12 months was I going to turn up to dinner with Chris and not have had that episode go live. Yeah, but we can't thank the ones that are sitting on the server at the moment, Aaron, because then it'd be giving too much away.
Okay. No, that's fair. Let's go with that. I think for me, like in addition to the guests, just the audience and listeners and the people we've met who found us through the podcast all get referred to us because of a podcast episode. And even I was thinking of the Corbettes, like at an event on the Goldie last week, and Marita was like, you guys are my most listened to podcast, not just that I listen to every episode, but there are some episodes I listen to 4 to 6 times. And it's like, wow, that is...
Oh, thank you, Marina.
That is bloody awesome.
I did have someone come up to me at South by Southwest and say, I was in a really bad mood last week, so I decided to put the Tribe podcast on and went for a walk. And within 15 minutes, I was laughing and I was good. And I was like, I'm glad we can provide the mental health support.
See, I thought we should come with a mental health warning, but that's actually a positive.
I think last week's episode that I should make into a short is where you were pointing out whether there's any correlation in the concentric circles between drinking out of a toilet and returns.
Yeah. It was as soon as John was talking about drinking out of toilets, I knew that my headspace was fine.
And it was lost because that was raised with me last week. It was a new toilet.
No,
Can I just?
You're not okay.
I'm not an idiot. I am reasonably intelligent.
Yeah, but you don't know what's happened. No.
Let's not go back there again.
Yeah.
Well, I very much thank the all the regulars. It was actually Peter Seidel early on at an event, and the podcast always concerned me a little bit in the early days, just because I don't know, you get a little bit self-conscious of things. And Aaron, you knew Peter for quite some time, but I didn't. And Peter came to the event. We were having a bit of a chat, and he mentioned that he had listened, and then we had a bit of a chat about a few things, and he seemed to quite like it, and that gave me a little confidence boost, not to be so self-conscious on a few things.
But to that point, Don, I think for me, early in the podcast, I was nervous about some of our content. I remember a couple of times us having combos at different points about whether a certain thing should be included or not. And I remember one was the line about the dildo of consequence never arrives lubed. And we had a long discussion about whether or not that should be included. But like with time, it's the realization and the consistent feedback that actually it's in the label. Transparent VC and us being ourselves seems to resonate, at least with some. So I've become more comfortable with it. And there's a lot of trust in that editing of yours.
Unfounded. I think one of the, and we should say it all started the very first episode, and for a number of them was with Elaine Stead, who's now with Main Sequence. That's where it started, and I think, Jack, one of the biggest changes and transitions is you and your confidence over the time. I mean, you still don't say much, but when you do, there is some confidence.
Yeah, I think going back to that first step, I sat in the corner and didn't say a single word for like a whole hour. But I think once Elaine left, the bar was lowered, so I could chime in now.
That's a fair comment. That is totally fair.
That is fair. Yeah, she has a very high bar.
No, but I double down on that, Jack. Like seeing your growth on the episodes, like when you speak, it's nuggets of wisdom, and you remain the person most spoke about anywhere I go, any event. Like on the Goldie last week, people just ask about two things: how's Myron and how's Jack? I was like, yeah, I'm good too. Thanks for asking.
We should be able to find a photo from the first step. I would have had hair, no mortgage, no baby. There's been so much happened between.
Oh, to be young and happy again.
Well, you don't look 14 anymore, Jack.
Yeah.
What about for you, Ash? What's been the best parts?
Well, I have only had the chance to be on a recording with Ben Thompson in terms of guests, but I thoroughly enjoyed that. And I thought it was a really thought-provoking podcast. I still have a very clear picture in my head of him describing a pivot versus attack in the sailing analogy, and I always come back to that. So that's very much stuck with me. I don't listen back to them. That gives me a little bit of anxiety. But I will say in the interview process, I did listen to a fair few. And the Tom Waterhouse one was definitely a surprising insight. I was very, very impressed. But Vu always just gets my brain absolutely spinning. Always such good questions.
I don't think we've given enough credit to Vu, because Vu was actually the first episode. We turned up to his place in Logan. I remember we went to Macca's first, and I had the recording gear that we learnt there and then in the Go One offices. That was episode number 1, and then sharing it with Vu, because the weekly format didn't come until a few episodes after. They all started as some of the individual ones with Vu, then Kim Hansen of Cake, one of our portfolio, and then Adrian, and then Luke Anea. That also helped. But Vu lending his brain and his time to help us launch this, I'll be absolutely grateful for.
Yeah, absolute legend. I remember that because I couldn't hear anything through my headphones, even if I said something. I remember thinking, I've been unplugged. We were still literally working out the system.
That was the intent. I just couldn't work that bit out. You were up here, weren't you, Jack?
Yeah, but at that point we only had 3 mics. 4 mics. So I got to just watch that one from the sidelines, which I was happy about.
That's right. But you were in the room.
Yeah. I was soaking up all the value from Vu. I just didn't have to contribute, which I was totally fine with.
There's a selfish reason for, I think, the tribe, this weekly episode. For me, 1, it's a space to connect. 2, you're always having to look for interesting things. I think it keeps us on our toes a little bit, at least having to go out and create an episode and think and talk through things. And I look at a lot of funds that haven't survived this downturn, and to me, there haven't been enough things to sort of keep their energy up, keep them active, keep them alive until things return. And for me, one of them is this podcast. It's one of the favorite parts of the week.
I definitely think it's one of the highlights, like for us to be able to catch up as a team and kind of just chew the fat and get to know each other that little bit more in a different way. But to your point as well, just about researching different things and forcing yourself to be across different things. And then, most of the topics we pretty much agree on, but occasionally we'll have different perspectives, and there's a lot of value in that. So I think as a format, just as a team, it's bloody awesome. The fact that other people seem to find value for whatever reason is just like cherry on top.
Well, my little notes here, another worst of TT was the time that I announced a portfolio company's restructure accidentally through an episode. That I didn't cover myself glory there.
That wasn't that long ago too. That was fairly recent.
But yeah, there's not many times that I've had to pull an episode down and re-edit. I reckon I've done it no more than 20 times.
Only 20%.
Was that really good episode when Ash and I were in Australia and you guys were in the US?
Oh my God.
God, I was wondering if people remember to that chat.
Did that ever go live or did that get scrapped?
Well, about 5 minutes of it went live, didn't it?
Yeah, we recorded 90 minutes and 35 minutes ended up being recorded.
That was so painful.
Yeah, you learn your limits.
Do you?
Yeah, John, you've never learned.
Yeah.
You've never learned your limits.
You still yet to find them.
I hope I don't. Imagine that. Imagine learning your limits.
I did meet someone that did mention the other offsite, Don, and said, I couldn't go. And I was like, oh, okay. And then and they were like, yeah, this da-da-da-da-da. And I was like, right. And then
Who was it? Who was it?
Come to me, medium height.
Oh, that nails it. Fuck.
That's pretty much 97% of the ecosystem.
From Brizzy. It was a basic guy name like Grant, Craig, Trevor.
So what's changed since we started? I think one of the biggest changes, I should go back to some of the show notes, but just the proliferation, everything is AI. And I think one of the big things is like go to market has a big change.
Yeah, I think the macro tech changes, definitely AI, go to market. We talk about durability a lot more. I think like a little thing, if I reflect back, some of the early stuff, we kind of talked about, I remember talking about the Qantas board there for a while and kind of big company news. I think now we get into, I feel like we get more into the founder journey and more into the nitty gritty of like the operator level rather than the big kind of corporate end.
No, that's true. We thought we moved away from any macro stuff, and unless it's for that scale up phase, it doesn't really make it in. Any changes you can think of, Jack?
No, nothing right now, Dom.
What about reoccurring themes? What are some of the things that have just always been there?
Founder behavior. Like I think for me, we always keep coming back to patterns of behavior amongst founders and how much of this world is driven by a founder's programming, like not even necessarily their decision making, because I'm not convinced they're actually consciously making decisions. I think they're just repeating past programming. But I think that's an undercurrent in almost every story we touch on. Just that human level.
I'd say from the time I joined, obviously the business and the podcast had gone through a few evolutions, but there's been kind of reoccurring themes, and that pattern recognition of founders, Aaron, definitely fits into it. But I think it's more broader of how you think about life cycle of business, how you found your thesis as well in terms of what we do and don't invest in, the kind of magic of where Tribe can add value. And I think for me, that's just been very consistent. The other key point for me, I think, is when Jack talks, listen.
That is a true
Jack,
statement.
Don't shake your head.
I love that Jack didn't even actually say anything then in reply.
I'm trying to see if there's a thing on my screen. You know, you can use AI sometimes. See if I can put like a wig on him, like a flashback to episode 1.
A wig.
He just gave me the look of Ash, you're full of it though.
I think you're right, that human aspect. I mean, for me, the thing that it's this reoccurring thing that comes up is one, conflict, right? There's a big difference between constructive and destructive conflict, and we just see that if you boil down a lot of the things we talk about, somewhere it's either a destructive conflict and this idea of trust and respect being the foundational ingredient. And talking with someone today, they've lost a key person in their organization. When you boil it all down, lost trust and respect. And why did they lose trust and respect? Well, they didn't have the ingredients in there to support it during the difficult times. And then a constant thing that I think we talk about that will always reoccur is that all problems are not equal. All problems depend on where you are in the life cycle. And a lot of the stuff that we try and bring, and I think a lot of the articles we talk about is often companies not dealing with stuff in the right sequence relative to where they are in the life cycle. And so a lot of those things sort of combine and come together. And I think why we like talking about the concepts, even though they're repetitive sometimes, is that sometimes it just lands a little bit differently when you talk about the same thing from a different angle. Well, I think that's all the reflection we can do. A little trip down self-congratulatory memory lane. Here's to another 100.
Yeah, I'm curious where we end up for number 200.
Well, why don't we at least touch on a couple of news items? There was an article yesterday in the AFR, I think, that some shares in 3 funds run by Blackbird, the country's biggest venture capital firm, changed hands at big discounts, alarming backers who fear that many of the investments have been overvalued. They put a thing in here, an investor in the Blackbird 2018, 2020 and 2022 core funds are looking to sell down. The amounts that they're looking to sell down are 250 grand, 350,000 and 400,000. And it says that they've taken an average discount of 35%. There's a couple of different ways to look at this one, but should people be alarmed at a 35% haircut?
Personally, I think no. We see discounts on secondaries much higher than that. I get that this is Blackbird funds and not knowing the specific kind of unrealized rate of return that is in each of those specific funds, but I don't know. To me, it's a bit of a non-event, isn't it?
Jack?
I don't really know, Don, to be honest. Like, we don't have enough info because it's only small quantums that they're taking, like relative to the total size. And it's the last 3 funds that they've done. Like, it's not the first 3 that they did. So, yeah, I don't really have like too much of an opinion on it.
Yeah, I think when they say alarming backers, I think that's probably bullshit. Like, it's a secondary sale. There's always a discount. It's such small quantums. Like, if you're an LP from Blackbird's earlier funds, these are rounding error numbers. If you'd gone in at, you were saying, Jack, you knew someone who'd put in 250,000 is planning on getting 12 million back. Like, these are such small quantums to say that people are alarmed. Like, even at the last round, if you were to do a secondary, because often the person buying can't get the information, so they're taking a punt. Like, to me, I don't see the alarmingness of it.
And a little insight here for founders. Like, we're significantly smaller than Blackbird, but we've had to help some of our investors actually sell out of positions and move positions. Like, this stuff happens relatively frequently, and especially for those LPs that are sitting on illiquidity across multiple funds, and that whatever life event has happened where they need some liquidity or for whatever reason, this stuff happens.
Shit often happens. Divorces, found a property that I want, it's time to get a new boat, hair transplants.
Excavator caught on fire.
Oh, thank you.
Caravan needs a new microwave.
Yeah, so I think it's just a bit disingenuous to say alarming. Ash?
Yeah, I think it's just people trying to make news.
Well, Aaron, you mentioned earlier the word durability. And there was an article by Bronwyn Clune of Capital Brief who was talking about a panel at South by Southwest that says partners of Australia's largest venture capital firms warned that competitive advantages, once protecting startups, are dissolving fast as artificial intelligence reshapes how companies build and defend their value. Moats are changing in a way that we haven't seen before. SquarePeg founder Dan Krasnostein told the Investing in the Age of AI panel 5 or 6 years ago, you'd look at a business and try and work out what their moat was at an early stage. And typically, if you got it right, the moat would persist, not anymore. I'll put the link to the article, but Tom Humphrey, who we spoke about before that we had on, said he believes one answer lies in physical hardware, where when asked where the moats sit in AI, Humphrey pointed to companies that combine software with tangible products. It's fair to say when we first brought our thesis around hardware and software 4 years ago, there were a few people that called us idiots.
Yeah, completely. Like it was late 21, around the time of our first investment, when we were looking at some IoT stuff, and people just said, no, we don't touch. Why are you touching hardware? Don't touch hardware. And we've been beating this drum of the durability of a smart software wrapped in plastic play. And I feel like the rest of the world's caught up. Actually, the Cut Through Ventures report that just came out for last quarter also showed that investment in IoT and hardware robotics has jumped up significantly in the stack. So people have caught on. Maybe this is one of the downsides of having the podcast, is sharing all of our ideas and thesis ahead of time for others to learn from.
Yeah, the 8 people, they went and copied us.
Yep. Call a podcast. What is that? The Lone Nut, that YouTube video?
Oh, yeah. How to create a movement.
Yeah. That's a potential name for the podcast.
Jack?
I actually do definitely think we were like early on that train. And I can remember, Aaron, you were going to write a LinkedIn post and we're like, don't do it. Like, we're the only ones that actually like hardware as a service at the moment.
Yeah, that's
I remember we canned it. Let's not share it. But look,
and I think it was off the back of 7 Powers. So like we were all over like trying to find what a mode is. And then we came across Gaspot. And I think Gaspot was the first one. And then Grease Boss. And I can remember some of the early conversations with some of our bigger backers, and they just couldn't get their head around the hardware piece. And like we were just trying to regurgitate the 7 Powers to them, but it just at the time couldn't get across.
Well, Swarm Farm was the first. And that was even worse because we were trying to communicate ag and hardware and the software marketplace.
Yeah, totally. And we had one before that we passed through IC, but we couldn't get capital out of the syndicate. There was an IoT play in ag as well. And back then it was that feedback, both the fact it was ag and it was hardware. I think the rest of this article, I mean, parking the hardware component for a second, but this durability of SaaS due to AI, like I feel like we've been talking about that for a long time as well. And again, it feels like you can kind of see the VC lag that happens, I think, because up to even 3 months ago, 1 quarter ago, the investment going just straight into SaaS and AI pure play or AI-led SaaS, it's still happening, despite what's being said here.
I think a funny moment of, not last week, the week before, we had an updated pitch from a poor founder that pitched to us the week after we got back from the US the first time. What was his words, Jack? You were the first person to tell me my business was non-existent, SaaS was dead, and I was an idiot, or something like that.
Yeah. Yeah, I love he said that. Yeah, I haven't forgotten that pitch call.
I think on email he said, yeah, I'll never forget when Don had just taken the red pill from the Matrix and seen the future of AI.
Yeah. But what I'm really interested in is what's after the hardware SaaS. Like we've now, like that's pretty old now.
Yep.
I think there are a lot of markets that people are getting wrong from a TAM point of view. Because a bit like 10 years ago, if you had a security system in your house, you were dead set a drug dealer. Like, I don't know about you, but if I saw someone with cameras on their house, you go, they're doing something they shouldn't. But then it's really the software part of Eufy and other cameras that made the usability really easy, combined with the cost of those coming down, which combined with the ease of installation. And that TAM has absolutely skyrocketed. And I think what we're finding in the IoT space in a number of sectors, the market looks pretty small at the moment, but that's because the sectors are only using it on a small part. And as the price comes down, the usability goes up and the integration ability goes up. I think some of these sectors are going to have an explosion of revenue. The problem is, will they be able to maintain margin? Will they be able to maintain durability? Now, a line that we stole from John Hempton is a commodity product with a zero marginal cost, subject to competition, the marginal profit always goes to zero. And so when we're analyzing the durability of something, we need to take each part, each component parts of that sentence, a commodity product. Okay, well, how do we ensure that this isn't a commodity product? Zero marginal cost. Okay, well, where's that cost structure? How do we get some kind of durability in that input? Subject to competition. How do we make sure we're looking at stuff that is either hard to replicate, has some level of defensibility? And then we overlay the more traditional things of switching costs, network effects. I think it's fair to say that's the way we approach it. And it can be challenging sometimes when you're trying to be a good citizen in this ecosystem, when investors you respect bring you deals. But then you look at it and say, yeah, I think this could be a really great revenue business. I don't think it's going to make any money, and I think it's going to destroy all of the capital, and that's not where we want to play.
Yeah, I totally agree. I think that intersection of the hardware manufacturing costs coming down, battery life extending, onboard compute getting more powerful, data rates and data costs dropping. Like the way to look at these IoT elements, even if they have one specific use case right now, they're a communication layer which SaaS can draw more info, more data out of. I think that durability is really important though in this context, because people will look at hardware and think, oh, like high switching costs perhaps, but the hardware of itself doesn't necessarily create durability. I think if you've got remote environments hard to access, yes, there's an additional cost there. But I think things like contractual terms, looking at simple things like who owns the customer, the integration into workflows, the integration of the data coming into systems, like there's so much more to it than just the fact this is hardware. I think hardware lends itself to more opportunities for durability, but just because something's hardware doesn't mean it's durable.
I also think that the TAM for some of these is likely to expand because of the fact that you can now use natural language to query insights and results. I think sometimes there was bottlenecks and additional friction because even once you had the data, putting it into a format that could then actually be leveraged by non-technical people, by executives, by salespeople to then drive insight and drive action was a pain point as well. So the ability to now query something which is leveraging additional data, I think is also going to expand that potential TAM.
Yeah, absolutely. Well, I think that blends a little bit into my theme of the week, which in a number of conversations with just some portfolio and some investors has been back to durability, which we've discussed a couple of times here. And I really think founders often just get caught on the rat wheel and they don't get enough time to sort of think into the future and make some of the decisions they need to in order to really focus on durability. And sometimes we find that there's a conflict with shareholders because some shareholders are trying to drive to shorter term outcomes that don't create the environmental space to concentrate on durability. And often we find we're having conversations with other investors just saying, hey, here's our perspective. If we can create a little bit more of the environment, or if we can ease up on these goals, these KPIs, just to create a little bit more space, this is the reason why we think we'll get a return on that. That's been my theme, coming back to this durability, because ultimately we're here to get a return. We're here to get plus 30% IRR. And what that means is we have to be investing in things that are durable in the long term and can harness AI and can endure against competitors and whatever else. And that durability thing, I'm just not sure gets thought about enough. Who's got a theme?
Jack or Ash, you go next.
I can go. My theme is twofold. Obviously, South by was vastly driven by AI, but the theme from that is the interesting conversation was not had in the room. The interesting conversation was as you're walking out, hearing everyone else's perspectives. And with that comes getting outside your comfort zone and connecting with people at events. People go to events to, yes, hear insights, but I do think sometimes you forget that most other people are also there to connect with interesting people and hear new perspectives. And so it took me probably half a day to just be willing to spark up a conversation with the person next to me, or walking out of the room, or as we sit down to listen to the same, topic. Oh, why did you come? What are you looking to gain? And I didn't once meet resistance. It was always a very insightful conversation. And I think in this world, we just forget. We forget to look up. We forget to make eye contact with people. We forget that everyone's there to make a connection. And sometimes people are more comfortable with that or others, but that we should spend less time looking at our phone when there's a lull in attendance or content, and actually just look to connect with each other. And that human connection is really important. And you don't know what's going to come of it, but it's refreshing, exhausting, but great. And so I'm taking that into this week as well.
Cool.
Yeah, I love that, Ash. I think it's always like such a good reminder, and like going to these events for the random collisions, like so much comes from that. I think, yeah, theme of the week, because it's Monday and I had last week off, I don't really have a theme, but I think the theme for the past 100 episodes, like collectively as a team, would be continuous improvement. And if we look at like the week to week, there's always like an underlying theme or topic that we're talking to. And that's like typically what we're chatting amongst us. And like, if I can think of our investment criteria and how that's evolved in our thinking, like you go pre 7 Powers to post, and like each time we're reading something new, whether it's Tom Humphrey's blog on Go to Market, like all these little bit of nuggets that we're reading, digesting, and then chatting amongst us. And like, we're just taking what's good and throwing what's bad out. I think that's just like the theme for the past 100.
That's a bloody good one.
It would be funny to go back and just look at some of the really early day stuff.
I don't know if I could. Be too cringy. I think my theme of the week. So I went to the fuck up night on the Gold Coast last week, and it was really clear the difference between two of the panelists, two of the four. Like there's just these two camps of types of entrepreneur, and I think the big insight was, so I believe that however difficult you believe the journey will be, it ends up that difficult. And you could see these founders who very much spoke of their fuck-ups as if they were the victim in certain things. But really, when you unpacked it, they had made certain choices that had put them in a situation where these things happened. And I think this is where having external lens, like having, whether it's investors who add a ton of value and a different perspective, whether it's, I don't want to use the word mentor, but others around you, or being connected with other founders that are on the same journey and ideally a bit ahead, and those who've made some mistakes and can look back with a bit of wisdom. But you want to have those shortcuts there to skip ahead. And I think the more work you can do to understand when something goes wrong, the true causality of what actually went wrong, and taking 100% ownership, because in almost all cases, it's a manifestation of your mental model. And that can be quite confronting, but I just see it play out time and time again. And it's definitely something really topical for me in the last couple of weeks. It's just how much of my world has come about through subconscious choices and beliefs.
You can see the difference in founders and just people in general. Those that take comfort in victimhood versus those that take accountability for their part of it. And their part of it sometimes isn't the thing that happened. It's their reaction to the thing that happened and how they move forward. Those are two big differences of two big camps of people. And when I think of the great founders, the great investors, the great humans, they're in that camp that it's shitty things happen, but they're able to sort of like draw a line and say, okay, well, this is how I'm going to respond going forward. And it's going to be from a position of strength. It's going to be from a position of authenticity. It's going to be a position of accountability. And I'm not going to play the, oh, woe is me, even though it feels so nice. And you get a lot of external validation and a whole lot of woe is me. And you were saying in the room, Aaron, there was also two groups of listeners, and for the people that were bitching and moaning and complaining, there was a lot of people that were giving them a lot of, what's the word?
It's a cheer squad. Like, I think that's the thing.
It feels nice, but it doesn't
there's
help
so
you.
much power in victimhood where you do get that dopamine hit. But I'll share, like, Mick Dempsey was there, and you know, he talks about failing moments in his life, which every single one of them was a big infliction the other way for him. And you guys know he bought the Normandy Hotel with his brother, bought it for $1 million, was supposed to spend $1 million renovating it, ended up $3 million debt to some loan sharks because the build went over, and they hadn't even opened the doors yet. And he got wind through someone that there was the council was going to, or maybe state government was going to buy back some of the land, resume some of the land for a road. So he just, in that moment, thought, this is it, it's the end of us. But then what he did, he proceeded to load up that side of the land because he worked out where the road would be going, proceeded to load it up with assets. So he got a billboard company in on a 20-year lease to put a billboard on the building on that side, moved the liquor license to the building on that side into that part for the bottle shop, and just put all this value on that side. So when they did come through to do the assessment, he ended up walking away with more money than what the actual hotel had cost in total, and they only took 9 square meters. This is a guy that is classic. Every moment in his life where a door is closed or he didn't get what he wanted, he has gone about turning that around himself to be a great outcome.
And didn't somebody ask a question about something, and Mick just kept saying, I don't understand what you're saying.
This was so hilarious. So they were talking about identity death, and the first speaker, being respectful, was very deep in this topic of my identity died and was very anchored to that. And the next speaker as well, very anchored, and it got to Mick. And Mick's like, I don't understand the question. What do you mean? And they kept trying to explain like identity death to him. It's like it just didn't compute, and he thought it meant identity theft. And he's like, I don't even have social media accounts. Like, why are you guys talking about your Instagram profile? I don't understand any of this. I'm just me. And it was classic Mick sitting there in his like short, stubby shorts, t-shirt. He was by far the wealthiest individual in the room, but also that like fundamentally the happiest human. Like he's just there living his best life. And this concept that you let ego or facade step in the way was just so foreign to him. And so by the time I got to Mark, the final speaker, he just said, I think the lesson is just be like Mick, which I think was very true.
No, that's good. I like that. I was supposed to have a philosophy corner ready. I don't. This is somewhat philosophical, and it is relevant to, I think, a lot of founders, but happiness is not the absence of problems. It's the ability to deal with them. I think that's broadly right. And when you look at a lot of founders that we invest in, they think if they can just solve their problems, everything will be fine. But that's not the way the world works. You solve a set of problems today, and that then gives you the right to have a new set of problems tomorrow. Like they're always going to come. That's why we use the life cycle model. And I think happiness or contentment or satisfaction or just feeling confident is not seeking the absence of those problems. It's seeking an environment where whatever gets thrown at me, I'm going to be able to sort. And I think by the sounds of it, some of those people at the fuck up nights are not taking accountability for, it's not the problem. It's you didn't create the foundations. You didn't make the decisions fast enough. You got anchored to your ego. You got anchored to all this other shit. And you didn't concentrate on creating the environment to solve the problems. And I think, and sometimes I forget that as well. Like it's I have a 4-year-old poking a fake sword through my door at the moment. Hey guys, Daddy's just on the phone. Can you give me 5 minutes? We're about no chewing gum, please. God, the mother bought the chewing gum. Unbelievable. Talk about a problem. So anyway, there's philosophy corner. I think that so I think that's only all that's left is Ash's favourite episode.
The sharpening.
We did the sharpening. We did talk about quite a bit of property in the last 100 because it's one of the big drivers. But this is interesting. So this is a chart, the median house price by public transport travel from Sydney CBD, and the lines from 2021, 2016, 2011, 2006. But have a look. That is just an exponential difference, whether you're 1 to 5 minutes, 10 to 15, 20 to 25, 30 to 35, 40, 50, 60, 75 minutes from the CBD. Property prices haven't really, well, they've doubled, right, since, 2011. So about 15 years. They've doubled if you live 70 to 75 minutes away. But if you live 1 to 5 minutes away, it's more than doubled. It's gone from 1.4 million to over 4 million median in Sydney. And that's one of those things. The stock to flow ratio is also important for assets, whether it's property, whether it's precious metals. But that ratio sort of tells you that when the stock becomes quite fixed and there's not much flow for an asset in demand, the price always starts to go parabolic, or at least up a lot more than others. And so that's why I always advise, from a property development point of view, you want to be as close to a point of demand. Doesn't have to be the city. That's why Noosa has always been ridiculously expensive. But I remember when we started going there, you could buy places on Noosa Parade for $1 million that are now selling for 30. It's because that is a very fixed location with a Noosa council that does not allow high rise. There's only a couple of hundred properties in that whole area. there is a very low stock to low flow ratio, and the price will just keep going up until one of those things changes. Either the demand isn't there or the supply increases. And it's the same thing here. People that go and buy cheap houses 2 hours from the city, they just can't get the same return.
What's interesting for me on this one is that I would expect post-COVID, with more people working from home, proximity to city to actually matter less, but this actually shows a greater acceleration in pricing, like that gap widening.
Yeah, it's interesting.
I can confirm this for Brisbane too. Like the difference in property prices for a relatively similar or identical house, just another 7 to 10 minutes up the road, further out of the CBD, can have like a 400k price difference. It's nuts.
Yeah, it's crazy. Now, this is a chart of the Japanese property market that I sent to my family's group chat the other night when people were talking about how good it was having their properties valued, the level it is. But it just shows from 1980, the price index goes from 100 to 600, and then it goes all the way back down. And it's only been in the last little while the property price have increased. Now, okay, Japan's different. It's got an aging demographic. There's a whole lot of things. I'm not saying we're the same as Japan. But I'm saying where you have a credit-driven, supply-constrained ramp-up of demand, you can inflate unhealthy bubbles that do pop. And when you have a look at the consumer price index, it stayed reasonably flat. It was going up a little bit, but property just went through the roof. So history never repeats, but does it rhyme? Now, this is a chart showing the ounces of gold required to buy a new house. Now, the number of ounces of gold required at the moment to buy a new house, this is in the US, I think it'll be similar, has reached a low not seen since 1978. So it's going to be interesting to see what gives. Does the gold price give, or does the property pricing give in order for that to revert to the mean? Because it's, or will it continue? But you're going back to 1960.
Yeah, what happened in 78 when it hit bottom?
Oh, I just think it was a gold price spike. It went crazy. And then you can see once it hit that level, it then took 20 years, but it went back the opposite way. But I can't, have you seen the lines of people standing to buy gold at the moment? Like, why do humans wait until an asset has doubled to then start queuing in the street to buy it?
Yeah, there was a massive line in Sydney out front. I was walking past to get a coffee, and my coffee was at 7 a.m. and this shop didn't open till 9, and there would have been already 60 people in line.
Yeah, it's just crazy. Well, I've been sharing it for a little while, but where I took the last 35 years of the VIX index, of which there was an average given, and that we were in the territory when it was starting to spike. Well, we finally got the cyclical spike with the markets dying. So for those at home, the market from the VIX market, from a volatility point of view, on average tends to find its low in July and August. For us, we were a little bit late. It was sort of September, October, and we finally started to get a little bit of that cyclical volatility, and it looks like that's going to continue. I just thought this was funny. So don't send me nudes. I want to see the scans of your amygdala structure. I just laughed at that. Because that would be so for listeners at home, there's two amygdalas. Amygdala, how do you pronounce it? Amygdala.
Amygdala.
So one shows normal and one shows psychopath. And so instead of in the early Tinder days sharing photos of physical attributes, an MRI scan of your brain might be more helpful.
I just finally got my brain MRI done on
you
Friday.
Did? It came up negative?
Well, they didn't say, so we'll see. But I'm curious now, after seeing this slide, I'll share it with you. When I get the
Is that
the
your
image.
first ever brain MRI?
Brain MRI, yes. You sound like should I have had more in my life?
I don't know. I've had a bunch of concussions, so mine's probably,
Really?
hit on the side.
And then finally, given I've shared that other one, keep in mind this was said by Henry Ford people. This isn't me. It just says, a man who stops advertising to save money is like a man who stops the clock to save time.
I'm not sure what we're supposed to do with that.
I don't know. I could find something. All right. I got to jump on a call. Two business partners that you're aware of have finally had a falling out, and I've been asked to mediate.
Of course.
Oh, ask for a pay rise.
Couldn't have seen this coming. No. Now I'm going back to my consulting days of creating foundations for people to problem solve. What are we looking forward to? I'm looking forward to seeing you, Ash, on our home turf.
Yeah. See
This
you at
week?
Westie on Thursday.
Yeah, there's a lot on this week. The UQ event tomorrow.
Thursday.
so-
I thought I was seeing you Friday.
Well, we've got the breakfast Thursday, but I can also see you Friday.
Aren't you
here
in my
until-
calendar for Friday?
I was, but then we have the brekkie on Thursday. But I can do Friday also.
Because I had a conflict with that breakfast potentially. Anyway, we'll do our life admin outside of this episode. How's that?
Yeah, just call me.
Good job.
Figure it out. And
Nah, but on,
oh my god, Jack and I are doing jumpers.
Oh, it's hot as hell.
it is warm. No, I'm looking forward. It's a busy week. We've got UQ tomorrow. Be on a panel for that. And then we're co-hosting the breakfast with the Southside crew on Thursday morning. That should be good. And then all sorts of other random catch-ups during the week. So, it's a busy one.
Jack,
I don't have anything planned, so just looking forward to a quiet one, to be honest.
if Nigel from Canopy is listening, Jack's in his Canopy jumper.
For 100 episodes straight.
Yeah, pretty much.
That's pretty much, yeah.
Little Rose.
Yeah. If it's cold, he's been repping the merch. Although the new merch that Nigel's promised to send, I think looks pretty good too, Jack.
Looking forward to it.
My stomach has expanded a bit, so the medium tribe jumpers no longer serve their purpose.
Well, not helped by the fact they seem to shrink in the wash. At least that's the story I'm telling myself.
Yeah, that's what I'm going with.
Well, you're wearing Mars.
Yeah, true. All right, guys. Good.
See ya.
See ya.
See us.